I'm not really sighing from relief in that sense. For me, it was very clear from the start that they will be doing the payments. And, we had some comments that, they're taking us for a ride and this. But obviously, when you're not discussing direct with the management, then it's, things look different. But when you have this sort of a personal contact, everyday correspondence, then you know where things are going. The main lesson here is that any LO on the platform should have one or even more bank accounts that they can use to transfer funds in case KYC, AML, whatever regulatory changes may come. I mean, from the banking perspective, that there's a backup. Obviously, I mean, they are in trouble, right? So, you wouldn't have such delays if you were not in trouble. Probably a solution is at least a few months away still. And like I said, in the meanwhile, then we'll just need to dig our own pockets and bridge to the investors as has been agreed. We are at the final stages with a company called Current from Latvia. But what comes to Current is actually a car rental business. So effectively, they buy the car, they rent it long-term to the customer, and it provides a steady cash flow. So that has been something that we've been working on quite a long time. And I would expect us to sign next week or this week, hopefully this week already.
Welcome back to the fourth episode of Income Insights. I'm your host, Denny Neidhardt, and alongside me once again, Income founder Kimmo Rytkönen. Kimmo, good to see you. How's things going in Estonia? I saw that you recently been to Asia. Was that to escape the cold winter, or was it to onboard some new lenders?
Yeah, thanks, Denny. Happy to be back here. I had a short break from the cold in Estonia. I was in Thailand for 9 days. It was actually a sort of it's called a Muay Thai camp. So training, food, rest. Very good. Some friends of mine from Estonia organized it, the boxing trainer and some other friends. So I thought I'll join them. So strictly for training, no new loan originators coming from Thailand.
Okay. Can you just very quickly elaborate what's the benefit of going to Asia to have a dedicated boxing training camp compared to Estonia?
Probably there's no benefit. It was just a good way to get some sun and to, and at the same time to do something that I really like and love. So yeah, I guess, and it's an experience. 30 degrees outside, outdoor gym, local trainers. So surely some techniques stuck in my mind and a little bit, even if I'm too old for combat, but that's a separate story, right? So
Age fight.
Yes, exactly.
Okay, yeah, thanks for those more, let's say, insights on the private matter. Obviously, we want to keep most investors in the loop about the current events and what's happening on Income Marketplace. Now, prior to the episode, we had a quick discussion, and apparently it's going to be a bit more of a lender-focused update session, a lender-focused podcast where we just touch base on a couple of lenders and see about their current status. Income also published a lot of news as of late on different loan originators, whether it was Hoovi, DanaRupiah. So let's just tackle them each by the other, and then let's just see what the current status is here. Now, since we obviously have been almost to Asia now a bit, Thailand close, now Indonesia with DanaRupiah. Lately, I had a feeling there was there was a lack of new assets available. And then later last week, there was an announcement regarding a new enhancement structure. I don't know if that was kind of connected and related with each other, but maybe you can talk about what's happening with DanaRupiah. I think it's still to date probably the lender with the biggest exposure and income, or at least it was for a very long time. So maybe you can just elaborate on what happened there the last couple of weeks.
Yeah, thank you. DanaRupiah is a good place to start. It was by far the largest. I think we peaked at around 6 million outstanding. Today, I think the balance is around 2.5 million, which actually puts it in the range of Hoovi and also ITF. So it's starting to be a bit more balanced in terms of exposure. ITF is actually closer to 3 million already, so at the moment might be the largest. But shortly put, DanaRupiah was one of the main ones, right? And investors love the short-term loans, the quick turnaround, the cash flow. So there was really a lot of appetite for it. However, there were some regulatory changes in Indonesia, and then essentially they restructured the setup a little bit. So just to comply with that, and that was the email that was sent to all the investors. So we did a due deal on one of their other, let's call it super lenders, what they use to fund their own P2P in Indonesia. And then essentially we just added it now to the structure. So this should probably increase their volumes again back to more normal levels. Perhaps not up to 6 million, but I would expect another 1.5 million to be able to be achieved with this structure. Now, if everything goes well, it's a Chinese New Year. Everybody's celebrating there. So they listed already some 30,000 euros worth of loans. It was more of a test from the other lender. Everything is under the DanaRupiah umbrella, also from UX perspective. So if you have DanaRupiah in your auto invest, it captures the whole thing. So nothing really changes. It's more of a technical legal matter on the background. And they promised that once everybody's back, the team is back from the holidays, then they will start listing in more properly. So I expect us to recoup some of the lost assets in that sense, that the volumes will be back. But otherwise, yeah, business as usual with them.
Can you talk about the regulatory changes in Indonesia and what happened there exactly?
Well, sure. I mean, there was just a certain limitation on a one lender that was put by OJK in place. So they needed to split the exposure or to split the source of funds in that sense. So like I said, it's more of a technical matter, not much else to it. And to comply in terms of regulatory environment there, and for us to enable listings, then we turned it around a little bit how it's done. But this is really maybe only visible to investors. If they look at the assignment agreement, they may see that there's another company under there in addition to what they saw before, but that is the only visual change. All the due diligence, all the process, the loan book, everything has been done in the same fashion as before. And like I said, it's all under the DanaRupiah umbrella. So that's, it should be very clear.
Just an additional layer now with the new SPV as far as from the new structure, right?
Correct.
Okay. Let's switch to Vivus Mexico. Finally, a story with a good, happy ending after we discussed it for almost every episode right now. Full repayment was declared on income recently. Probably a big sigh of relief, although you seemed very confident throughout the process that everything will turn out well. Maybe you can recap again on the biggest lessons learned here on the happenings with Vivus.
Sure. I mean, I'm not really sighing from relief in that sense. For me, it was very clear from the start that they will be doing the payments. And, we had some comments that, they're taking us for a ride and this. But obviously, when you're not kind of discussing direct with the management, then it's, things look different. But when you have this sort of a personal contact, everyday correspondence, then you know where things are going. But yeah, indeed, as expected, they did do the final payments. So we call it this structure closed. All the investors have been paid everything with their interest. Importantly so, despite the delays, investors received the interest for the whole delayed duration. So in that sense, no money lost, no profit lost, only cash flow delays. I guess the lesson learned here is really, as everything in terms of the delays originated from their bank issues. So I guess the main lesson here is that any LO on the platform should have one or even more bank accounts that they can use to transfer funds in case KYC, AML, whatever regulatory changes may come. I mean, from the banking perspective, that there's a backup. So I guess that's the main thing, and that's something we're now also discussing with everyone else. What if something similar might happen? So, but a happy ending.
So being part of your new due diligence to also double check on alternative routes where money can be wired.
Yeah, I guess the main thing is to have for them to have one or two operational bank accounts, preferably in different banks, different money service providers or money transfer companies. It depends on the bank's risk appetite. Fintech lending as such is probably one of the least liked businesses from banking perspective. And I guess the crypto would come as first for many banks. So fintech lending is probably the second or the third, with payment providers being also another one. And it really comes also down to geopolitical situation in the world and their concerns on the money laundering, who's behind the money, and so forth. There's a lot of sanctioned countries, money flows here and there. So even in this case, that was not the case. But banks have become unpredictable, and it is what it is. We just need to live with it, if you may.
And I think apart from our previous discussions, where also, let's say, income could proactively contribute towards an easier transfer route, might be also becoming a regulated marketplace, because apparently this also seems to be an obstacle for certain banks to approve on money transfers when it goes to non-regulated entities. So maybe that's also something from your end where you can proactively work towards a better.
Yeah, I mean, in this case, yeah, in this case, actually, that's not the case, and so far so good. But this was more of the loan originator related part. But surely a regulation or being regulated, being licensed, give you a sort of a umbrella of protection, but also it enables the banks to kind of lean on your license to say that their customer is doing everything correct. So surely there is some additional value in terms of getting licensed from that perspective.
To finish up with Vivus, in the announcement, it also was pointed out there might be assets coming back on income in the future, probably with a direct listing structure. How realistic do you really consider this option to be? Because my personal feeling is that maybe Vivus has burned a little bit its brand through the actions in the past couple months. How realistic is it really from your end?
Yeah, well, I mean, I think about it from this end that the first thing for us was obviously to get the money home, get it to investors, get it sorted. I think that sends a strong message on Vivus's ethics and the way they do business. That despite such problems, they were happy to pay all the interest. And as I said, I never expected them to actually not pay, even if it wasn't visible outside. In terms of their future listings, I think that's a discussion we will be having with them later down the line. Originally, the plan was actually, we already had that discussion. The idea was to shift from the current structure to direct listings in Mexico. Back then, they said that they are doing a lot of IT development, which means their IT team, like with every fintech seems to be, is quite clogged. So I think this comes from Vivus. Then, do they have appetite? Where do they find the interest in terms of allocating resources? We're open to discussion. But if it happens, then it will be a direct listing from Mexico with a different structure, with probably a master trust kind of a logic in terms of how to secure the investment. Mexico still remains a very interesting, even if maybe for a European investor a bit exotic, but it's one of those few countries where fintech is growing very fast compared to Europe, for example.
You maybe have other options outside of Vivus?
We've had some discussions. So we have had some discussions, and but building a structure that works there, it pretty much requires a sort of a trust structure. So that has taken quite a bit of time, and we've made some progress, but there's nobody really very close coming on from Mexico.
A country close to Mexico is Brazil, and recently I had a look. on the blog page, and I saw that the 5,000 euro, the monthly payment, both times now in December and January, has been bridged by income. Maybe a small statement from your end. What's happening with the Brazilian lender right now?
Well, yeah, I mean, like as we said, or as we've already communicated, the logic was if any money comes from there, then we will of course add that to the investors, and in the meanwhile, we'll keep on paying the 5,000 a month to make the investors whole. Shortly put, some development in Brazil, some discussions with them and their founders and also potential investors, but really nothing too much, not much progress. So I expect us to be still bridging at least a few ones before we get any concrete news.
Can you, because I'm assuming you have a good understanding about the overall situation at ClickCash. What's their general status? Because I think there's very little known about how they operate these days. How is the loan book developing? Are they still in business? What's the performance of the lender like these days?
I think they're like obviously, I mean, they are in trouble, right? So you wouldn't have such delays if you were not in trouble. Relatively, probably weak at the moment. But at least the management is looking for solutions. And in that sense, we hope to see a restart, something that would also accelerate the payments to us. But probably a solution is at least a few months away still. And like I said, in the meanwhile, then we'll just need to dig our own pockets and bridge to the investors as has been agreed.
What are the chances, according to your opinion, that eventually they will file for bankruptcy and close the business?
To be honest, I can't say. I mean, in that sense, I guess that's a question to them. At least so far, the communication we are receiving is looking for solutions instead of let's call it a day. So I can't really give you a percentage. It's like it's too difficult for me to assess at this point.
Okay, let's get back to Europe. We were seeing an announcement regarding Hoovi last week. A new product apparently coming, also on the marketplace. Car and mortgage-backed loans. What's happening at Hoovi? What's the new supply going to be like? And also many discussions, as we saw already, regarding the loan term, 6 years, 72 months. Although there was a little bit the buyback, the voluntary buyback missed out. Maybe you can clarify a bit on the new product from Hoovi and how it's also structured then for investors.
Sure. Maybe I'll start with the voluntary buyback or the voluntary early buyback because it applies actually to Hoovi and also ITF. So rightly so, investors noticed over the weekend, for example, that it seemed that their maturities were very long for Hoovi. So how the early buyback product actually works is when, let's say there's a 5-year loan, like most of the higher ticket loans might be 5 years in order to enable the customer to pay with reasonable installments. So how it works is that when they post through the API, they post of course, the original maturity date, the original schedule, but they also post a voluntary buyback date. And what that means is that on that date, let's say a 5-year loan with a voluntary date 1 year from now, then essentially that's the date when they need to buy it back. So what it really is a solution from us to enable investors to get their liquidity in a reasonable amount of time, and then they can make a decision if they want to continue with this specific loan originator. And Hoovi, of course, also can then list the loan again. But the idea there was that because we noticed that anything over 2 years is problematic, and I think it's in most platforms, do you have a secondary market or not? It's a question for investors. Do I want to tie my money for many years? So we came up with this voluntary buyback functionality. And that's mainly the thing what causes a little bit of confusion with investors. They looked at the actual majority, but then you have the voluntary buyback. So now if you take it into auto invest, for example, on our part, if you have in your filters, max 1 year loans, then you will still get one of those 5 year loans, but provided it has that 1 year early buyback, then it fits in there. If there's no early buyback, then you will not be getting these 5 year loans. So it's a liquidity tool for investors to enable faster turnaround of money, and then they have a clear cash date when they will actually get it. And of course, interest is calculated up until that date. So that's the story of voluntary buyback. And you're right, Hoovi did list last week quite a bit of new stuff. So what we did, we concluded our due diligence on their basic product, which has been relatively successful. I would say like about 2 million euros invested. So these are the basic SME business loans that they issue. Actually improved performance somewhat. So we managed to give them a little bit smaller junior share, higher advance rate, so they can leverage a little bit more. So that came on the platform. Obviously, we changed a little bit. But also an interesting one in some of those loans, the bigger ticket ones, the better score ones, the longer, bigger ones, some of them do have a car collateral as well. So, but these are all baked into the business loan product. So essentially, same old good Hoovi product. Performance seems to be good. Mainly a due diligence improvement, plus of course the addition of those car collaterals. More interestingly, we have a new product under secured loan type in the system, again from Hoovi, but you need to choose secured loan or all loan types in the filters, is a up to 50,000 and up to 72 months duration. And this is mortgage backed. So Hoovi takes a pledge on real estate from the borrower, and essentially then that enables them to extend the business loan with such higher tickets. Performance is relatively good, I would say, rather on the good end, even on those. But I think overall it's good for them that they have this real estate collateral. And now on these loans, they do realize that most of them do have a long tenure, so they will take a rather the early buyback in functionality there. So these are good loans. I mean, overall, we're happy with Hoovi. We're looking next to introduce credit lines with them. So that's a small part of their book, but something that's growing. And very good cooperation so far, and happy to add more products from them.
How far do you think the exposure can go with them and their new assets?
I think I think their goal to grow this year is probably around 10 million. Their overall book is today around 5 point something, I think. So I think we can list another 3 to 5 million, depending a little bit now. But they have good growth plans and a good management, and I think they will be able to do it.
Another core pillar lender is ITF. We haven't heard any news as of late, so maybe you can just give a very quick update on what's happening with them.
Yeah, ITF is probably the most favorite of everyone because they've realized that investors want good yield while also they want a profitably run business. So I think their combination is probably unbeatable. We did a due diligence on their new product. They'll be coming up with higher ticket loans, probably around the same yield to the investors, probably also utilizing early buyback. But this should be coming within I would assume in a month's time. So again, supply will increase. We're also constantly discussing with them on how to increase the basic demand of the products they have. And I think they reached around 3 million. Hopefully we'll see another 2 million of growth at least this year from them. So another good diversified pillar for us to grow on.
And lastly, let's talk about the most important lender that we haven't touched base on. It's the new one. Where is he, or where are they?
Yeah.
What's any updates? You seemed always quite confident that something is rolling and some action is happening in the background, but where are the new lenders?
Okay. Really, yes, I'm always confident. I mean, you wouldn't be running a business or you wouldn't be an entrepreneur without being optimistic to a certain extent. But yes, we are at the final stages with a company called Current from Latvia. Basically, interestingly, when we started looking at what assets are available, is it only loans or is it something else? And we looked at what else is in cash flows. And we bounced around with ideas of non-performing loans, for example. We've been approached by some collection companies, and again, interesting loan books, interesting non-performing loan books with everything with a very predictable cash flows. So we said, okay, that could be one step for us to expand the scope. But what comes to Current is it's actually a car rental business. So effectively, they buy the car, they rent it long term to the customer, and it provides a steady cash flow. So that has been something that we've been working on quite a long time. And I would expect us to sign next week or this week, hopefully this week already. We've done all the legal work, we've done the due diligence, we've done the structures, and also they've done the API integrations. So really, to my positivity, I think I wouldn't mention it now because I don't want to, disappoint investors also. But I think we are so close that I can safely say they're coming on the platform. And really, if there's appetite from the investors to kind of expand to different cash flow assets, then that's for sure a direction that we want to take also, not just to be a loan platform, but really look, what is a good asset that provides cash flow, also that has enough profit margin to pay investors a reasonable interest for the risk they're taking. The old risk reward thinking or concept. And yeah, so Current is a very interesting one, and hopefully we can send out official communication out still this week.
Can you already elaborate a bit on the new offer in terms of loan terms, interest rates, volume, and maybe a bit also about the business itself? So they're, from my understanding, Latvian-based company. How big is their business overall in terms of revenue, car supply? Maybe you can elaborate a bit.
I can say it's a medium-sized company in Latvian terms. The offer today, that's something we're actually still discussing with them, is that what is the interest rate that they will be starting listings? And where we're supposed to have a call today, we'll do that probably tomorrow. And then it kind of, everything falls into place once we have that. Probably again, the loan maturities are on the longer side. Because the average ticket is probably somewhere close to 5,000 euros. But they would be utilizing most likely also voluntary buyback. So we're trying to keep most of the assets at around 1 year, 2 year max, in order to have investors actually to pick them up. Because like I said before, statistically, when we look at anything over 2 years is a difficult product. So I think Steffi will send the communication with some more details out once we're done and dusted with the agreements. But should be an interesting product for the investors.
Do you know, you said small, medium-sized company in Latvian terms, are they only represented in Latvia? And how big is also their demand for funding? So which volumes? Does it make a significant difference on the platform than on income?
Well, I think that initially we are talking maybe 2 million euros. But obviously, I mean, we'll see what the appetite is from investors. We'll see how it starts. For us, I think we're starting to get to that ideal place where, and obviously we need more LOs for that, but having those 5 to 10 million, and hopefully we can get ITF and Hoovi to 5 million very fast, DanaRupiah back to 5 million. And then we'll see that range of 5 to 10 million. So as I mentioned before, somewhere I'd rather have probably 10 LOs with 10 million each than one massive mogo on the platform, or like it used to be. Like some platforms had a really strong big exposure to individual LOs, and that gives also the LOs a little bit too much leverage on the platform. So hopefully we can have a diversified split. And there's a few interesting ones, some LOs also from other platforms that are not completely happy with how the other platforms are working. So we have some interesting discussions. But my idea is, and obviously Lavrentis as well, is that let's rather increase the volume to this 5 to 10 million sweet spot in terms of number of LOs instead of having a one giant. Although we wouldn't say no to a giant, we would just have to be very, very careful on seeing how big an exposure can grow.
Yeah, I'm assuming once you have a bigger partner on your side, it makes things probably also a lot easier to maintain a certain level of liquidity and everything and supply.
Yeah, indeed. I mean, I think like that's one thing. If I look at like what we've done in the last 2-3 years, and what other bigger platforms have done and how they started, one of the key things what they did is a lot of them started maybe even as a funding project for their own stuff, and kind of like had one big anchor. Was it Credit Star? Was it Mogo? Was it whatever? And then essentially grew from that and expanded to others. And you're absolutely right. It helps to avoid those problems. It might bring some other problems, of course, but at least it helps to avoid the problems what we've actually had for a good part of the year last year, that there's no assets on the marketplace. But with Current, with Hoovi, with ITF, I think investors can finally say, and DanaRupiah also, that at least for the time being there will be assets on the platform, which is obviously good news, great news.
Yeah, and then I guess the reality check will be done in 4 weeks' time when we meet again and see if the self-fulfilling prophecy is coming to life, and we see a new lender after more than probably 1.5 years on income again. Let's see.
Yeah, that'll be, like you said, a reality check. Then if this doesn't go, then then I will have to tone down my optimism.
Yeah, I still have it in my ear. 20 million is the target, at least. The portfolio, you said otherwise by the end of the year. You said otherwise you're going to be very disappointed. Now the start of the year has been rather frustrating. I think temporarily it went below 9 million. So
yeah, 8.5. Yeah, 8.5 now. But I mean, I still think doubling this year is doable, and we're doing a lot of work for it. And I think the new products from Hoovi and all the due diligence work we've been doing with the other guys and new products and others, I think we'll get to 20 this year, and that's maybe my optimism speaking again. But I still think it's quite reachable.
We will evaluate at the end of the year.
Absolutely.
Kimmo, I think with that we can wrap it up. Anything, any comments left from your side before we finish up?
No, I think this was a good one, and I think the we used to do Friday updates on the LOs when we had this Vivus situation, and ClickCash was kind of like at the peak of its thing. Also, we commented other ones, but I think from now on we'll be communicating. Well, obviously we can do these updates with you, but we'll be communicating on a need basis on those things. So yeah, I mean, happy to see some of the problems behind us and a lot of work ahead of us, and let's keep building.
Very good. And I can already share with the ones that probably wish to be a bit more like a part of the podcast and want to have a bit more of an engaging discussion with investors' voices being heard, although I try my best to voice also investors here in this podcast. We're going to have some questions that investors can submit for the next episode, which will then be forwarded one-on-one to Kimmo directly. So if you're interested, please keep following on all the relevant channels, whether it's the newsletter, the blog, the Telegram group, and then you will be informed and know when and where you can submit your questions for the next episode. All right, Kimmo, that's a wrap for this week. Thanks again for your time, for your insights, and wish you best of success with with onboarding the new lender and increasing the general supply on the platform.
Okay, very good, Denny. Thank you.